Welcome to January 2nd, 2026. While you were nursing your New Year's hangover yesterday, the United States tax code officially went over a cliff. For 8 years, we've been operating under a specific set of tax rules known as the Trump tax cuts, or the TCJA. But as of midnight yesterday, January 1st, those rules expired. They are gone. And unless Congress pulls a miracle out of a hat in the next few weeks to fix this retroactively, your financial reality just shifted dramatically. If you feel like your paycheck doesn't stretch as far as it used to, buckle up. Because for the average Gen Z or millennial worker, the government just gave itself a raise out of your pocket. Welcome to Wallet Politics, where we track how the chaos in Washington hits your bank account. Today, we're breaking down exactly what changed overnight, the 3 massive ways this hits young people the hardest, and the one weird group of people who are actually celebrating today. The biggest shot for most young people is going to be the standard deduction. Think of this as the free money shield the IRS gives you. It's the amount of income you earn that doesn't get taxed at all. Up until December 31st, 2025, that shield was huge. For a single person, it was around $15,000. Today, that shield has cracked. As we revert to the old 2017 laws, the standard deduction has effectively been cut nearly in half, dropping down to roughly $8,000. Now, the tax nerds will tell you, wait, but personal exemptions are back. Yes, that's true. You get a little credit just for existing again. But when you do the math, for a typical single person making $60,000 or $70,000 a year, the net result is that more of your income is now exposed to taxes. The simple filing process you got used to, gone. It just got more complicated and likely more expensive. But it gets worse. It's not just that more of your income is taxed. It's that the tax rates themselves just went up. Almost every income tax bracket just ticked up a few percentage points. The 12% bracket became the 15% bracket. The 22% bracket became the 25% bracket. If you're a young professional finally hitting your stride and making decent money, you just got pushed into a higher tax tier without actually earning a raise. But the biggest losers today? Young families. If you're a beginner parent in 2026, this hurts. The child tax credit, which was $2,000 per kid, was just slashed in half to $1,000. And the threshold to even get it just got much lower. If you have 2 kids in daycare, you just effectively lost $2,000 a year in tax credits overnight. That's real money. That's rent. That's groceries. Now, in economics, whenever there are losers, there are winners. And the expiration of these tax cuts has created a bizarre reversal of fortunes based on where you live. For the last 8 years, people in high-tax states like California, New York, and New Jersey hated the old tax law. Why? Because it capped how much of their state taxes they could deduct from their federal taxes. It was called the SALT cap, and it was set at $10,000. Well, guess what? The tax cuts expired, and so did the SALT cap. If you own a home in suburbs of New York or San Francisco, and you pay $20,000 a year in property taxes, as of yesterday, you can deduct all of that again. So, we are in this weird situation where a high-earning homeowner in California might actually see their taxes go down today, while a renter in Texas or Florida sees their taxes go up because they lost the higher standard deduction. The economic map just flipped. So, the trillion-dollar question. Is this permanent? Technically, yes. This is the law of the land right now, January 2nd, 2026. But politically, it's a nightmare. Neither party wants to be responsible for raising taxes on the middle class during an election year. There is a very high chance Congress is panicking right now, trying to cobble together a retroactive deal to extend some of these cuts. But Washington is gridlocked. Do not bank on them fixing this before April. Here is the bottom line. Your January paycheck is probably going to look lighter than your December paycheck. You need to adjust your budget now, not when you file in 2027. The rules of the game just changed without anyone asking you. We are going to be tracking this situation daily, especially if Congress makes a U-turn. If you want to know if you're getting that money back, do me a favor. Hit the like button so this video spreads, and subscribe to Wallet Politics right now. Don't let the system surprise you. I'll see you in the next one.